Hey, good afternoon. This is Chris Robinson, Robinson Ag Marketing with today's pre-opening grain and livestock comments. One quick note: I'm having about a 10 or 15-minute informational meeting today, webinar, to explain to people who are not familiar with my program how it works. That's going to be today at 12 o'clock Chicago time. Again, this is going to be probably less than that, 10 minutes. So if you're interested, you want to sign up for that, go to robinsonagmarketing.com and we'll see you there at the webinar. If you missed the webinar, again, just call me, give me your information, or email me, give me your information, and I will send you the link so you can follow along with us if you're curious. Overnight, choppy markets. March corn had a 4-cent range down a penny and a half. D's corn, 3-cent range down a half-cent. March beans, another about 12-cent range last night, 64 to 52. We did finish down 5 3/4 cents. New crop beans slipping lower, traded down to 10.68 3/4. Wasn't that long ago we were going to trade $11, right? We got to 10.98. So beans moving lower. In the wheat, after having make a little bit of a run, we're down 5 cents there as well. 5.32 3/4 in March. Chicago, Kansas City at 5.39 1/4, both down 5 1/4 to 5.5 cents. Today, we're going to see if we get any sort of follow-through buying. It is the first day of the month. Will there be some position changing? There's going to be a USDA report on the 12th. Until then, we're going to be trading what we always be trading: South American weather, and also we'll be watching the exports as they start filtering out of South America, and we see what China does with Brazilian beans versus our beans. In the cattle market, the cash was higher on Friday, and the inventory report was bullish. We had seen people take some protection, meaning we sold off in front of the report. When people take protection, if they're long cattle, that means they're selling futures or buying puts. So that helped push the market down on Friday. We'll see in about 12 minutes if we can get any follow-through buying. No matter how you cut it, cattle have been on a tremendous rally, 3-month highs, over $70 balance in feeders, over a $30 balance in fats. You had seen the hog market explode, rally up 16 cents and make new contract highs. So, if we're due for correction, we're due for correction. It certainly gave everybody a chance to get some hedges on. The fundamental stories have not changed, right? Moving over to the real other volatile markets last night, silver all over the place, trading as high as 88 and as low as 71, 72 bucks there. 71.20 was the low, 88 was the high. So if you want to step into some choppy waters, go trade some silver. In the diesel market, if you got my weekly wrap, I covered the weekly changes, and just incredible. All it took was a change in weather, and heating oil dropped from 277 the last day to 240. Just people just getting completely chopped up if they're trading some of these commodities like they're at Las Vegas. You really have to be very, very, very disciplined with your risk management. I don't care what your opinion is. I always say, Mr. Market doesn't care what your opinion is. He'll come for you if you're wrong. That's why you have to have a hedge or you have to have an exit strategy. The U.S. dollar is higher. Again, we hit a 4-year low last week. People were a lot of squawking about that in the media. We've already bounced from a low there of 95.30. We're trading 97.30 now. So a 2-cent bounce in the dollar, U.S. dollar. That's going to ripple through everything else. That could be another reason we had a little bit of pressure in the grains. So we'll see how we trade today. Again, if you're curious, please reach out to me. The webinar is going to be at 12 o'clock. I'll explain to you exactly how my program works. If you're interested, give me a call, 312-638-8868. Go to Robinson Ag Marketing. Send me an email. We'll get you set up if you would like to come and listen into that webinar. Take care.